Hello from the Dukascopy TV studio in Geneva. I'm Daniel Schwenger. We will cover the new rules in bank reporting together with Olivia Gaudin-Tempels. She's Senior Project Manager from Antaes Consulting. Welcome to the studio, Olivia.
Thank you, Daniel. Thank you for the invitation.
The European Banking Authority has adopted new reporting rules on forbearance and non-performing exposures. What is that exactly? Can you give us an overview and why these rules have been adopted?
Yes, to give you a bit of context, this is clearly a post-2008 crisis regulation. The objective that is pursued by the European Banking Authority is to meet the market transparency requirements as well as strengthens the confidence in the European banking system. So here we are talking about credit risk, and we are talking in particular about two notions, non-performing and forbearance. Non-performing, what is it about? It's a large definition of doubtful clients. This is to say that is more large than the one given by Basel II Forum. And on the other side, forborne exposure encompass all type of restructuration on credit or refinancing of credits.
And what exactly has to be implemented in the existing accounting now?
So all the clients reported as non-performing or forborne will have to be integrated in the accounting reporting called FINREP. It means that the bank, primo, has the capability to identify, to spot any client or any situation that could fall under non-performing or forborne, any past due restructuring operations. Second, though, then, it means that the bank can qualify those situations and decide that the system can decide if those clients fall under the non-performing or the forborne. Then tertio, it means that the bank can stock this information and put it in the reporting. And quattro, the last one, it means that the bank can also manage the exit criteria when the client becomes performing again after a probation period. This is quite challenging because there are many events that can trigger a non-performing or a forborne, and those events will be very different depending if the bank is operating in wealth management or retail or investment banking. So it will imply norms adaptations and information systems adaptations, as well as provisions, financing provisions that could be affected by these rules.
So now, how has financial reporting have to change it by 2016?
So we have to integrate those non-performing and forbearance indicator in the FINREP, and we have to do it as a very granular breakdown level. The information has to be very detailed. This is which is quite challenging to implement. Also, there might be some difficulties to spot those clients. Let me give you an example. You are a client at a bank. You have a mortgage loan because you wanted to buy your house. Bad news, you made some mistakes or bad operations and you contracted other debts and you are not in capacity to continue to pay your installment to the bank. The bank will surely propose you to extend your credit duration and to decrease your repayment so that you can begin to have regular payment again. In this situation, you are a typical forborne client. Usually, we have this information at the operational level. We perfectly know that Mr. Schwenger is a forborne client. But this information rarely goes to the finance system. So we have to take all this information and convey it to finance systems to do the reporting. This is interesting to note that some banks, French bank consulted, stated that it would take at least 18 months to do the necessary adaptations in the systems to be able to do that reporting. And as you said, this is supposed to start the next 1st of January.
Will the objective to increase the transparency and comparability in the banking sector be achieved through this? What is your opinion?
Yeah, I'm tempted to say wait and see because it's not started yet. Anyway, I think it will be interesting to follow because everyone is working on the same basis, same definition. So definitely to me, transparency will be there as well as comparability between banks. And it's an asset because behind this forbearance concept, there is also a notion of hidden debts or some information banks would like to hide. So no, transparency will be there, all the information will be there. It's early to say if the confidence in the bank will increase because it will depend on the volume of non-performing and forborne clients that will be reported.
Olivia Gaudin-Tempels, thank you very much for being here today and sharing your expertise with us.
Thank you, Daniel.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.